Hi, I'm Marylen Edwards, Director of Mortgages for MT Finance.
And I'm Raphael Benggio, Director of Bridging here at MT Finance.
Thank you for joining me today, Raf.
It's a pleasure, Marylen.
We're in H2 already.
Believe it or not.
Yeah, what a whirlwind H1 was. For you, what was the sort of significant development that you saw in first 6 months of this year?
I mean, Marylen, it's been a very interesting start to the year. A lot of macroeconomic factors at play with the war in Iran. We now have a new Prime Minister, but more specifically within the specialist lending industry, the collapse of MFS has obviously caused a lot of ripples across the industry. But I do think it's made a lot of us lenders and probably brokers alike sort of get back to the fundamentals, which is transparency as a lender, strong fundamentals, strong underwriting, and of course importance of governance within their industry. How have you found things on your side?
For us, again, a lot like bridging, I think people have had to step back and look at basics to a point, how they underwrite, how they look at cases, taking a little bit extra time, reassuring brokers and borrowers alike that there's not going to be any fundamental changes in how we operate, that we will take maybe slightly longer because the docs have to be assessed, but the docs have to be given to us in a format that makes life easier, and brokers are understanding that, and the way cases are packaged is now looking a lot neater and slicker rather than piecemeal. I think brokers themselves now understand we have to look at things in their entirety.
Of course.
So rather than getting one doc one week, one doc the next, we are having fully packaged cases, which at the end of the day actually makes the whole process a lot easier and a lot smoother.
Yeah, absolutely. I mean, I think brokers sort of understand the extra due diligence we have to do as a lender on our side, and it's just helping to streamline transactions, as you say, if you have all of the information up front in that sense. From your point of view, Maz, what kind of trends are you currently seeing now in the sort of buy-to-let and commercial cases that we're getting in?
We're seeing a lot more portfolio landlords. We've seen a lot more people diversify into HMOs, utilising the large properties that come on the market that gain more capital for the landlord and more future long-term stability, having multiple tenants. There is a shortage of stock across the country, so these properties are widely snapped up as and when they become readily available. So there is a trend there, and they are becoming almost the norm in what we see for properties. Semi-commercials are another avenue that landlords are now investigating, again converting the uppers into not just one large flat but maybe some multiple lets. That alongside the Renters' Right Bill has probably streamlined a bit and made it more professional. The first tranche of these laws came into play in beginning of May. The second tranche is due October this year, and they are phased out over the next 2 to 3 years. But it's certainly making things more aligned for landlords, the operational process of the market more aligned. And I think people have just accepted it and carried on.
It's almost the new normal. It's definitely changed the landscape on your side for sure.
Yeah. How about bridging? Are there any shifts in the regulated versus unregulated side?
So regulated has been sort of consistently strong, almost growing year by year, which we've seen, and there seems to be a growing demand for regulated bridging, especially I think in the sort of interest rate fluctuations that we've had over the last couple of years. Regulated bridging has really found its place and created a name for itself. But what I've seen on the unregulated side is very similar to what you've been seeing. Sort of a lot of landlords and sort of professional investors are almost moving away from the quick flips of properties and are more sort of seeking out yield, looking for HMOs, looking for office to resi conversions, really the kind of projects where they can really add the value, get the yield in, hold something for long term and sort of ride out the sort of inconsistencies in the market. But it's definitely funny to see that we're both sort of kind of seeing the same thing currently in the current landscapes.
Yeah.
So now obviously well into H2, what are the current factors do you think for the rest of the year will affect the sort of market that we're operating in on your side?
I think rates have been and continue to be a bit of a hurdle, especially on the commercial side.
Yeah.
swaps and the volatility of swaps have not aligned with the way base has come down and stayed down. But that said, landlords are resilient and carry on regardless. If they really do need to capitalise, if there's a property that they need to take on and can't wait, they will look at options and they will look at ways to do the deals. For us, the growth has been phenomenal, and we'd like to carry that forward in H2. And along with that, we are looking to shortly release additional product specs in the commercial owner-occupier side. So we will be looking at assisting clients who have trading businesses purchase the premises they trade from, or purchase premises to expand and enhance their business growth. For us, that's a new chapter, and it's exciting.
Absolutely.
It's not something that's done a lot of outside of the banking industry, and for us, I think it will be an ease for people in those scenarios, whereas the banks wrap you up with, you're having to have your bank accounts, you have to have all your projections, your plans and everything in order. We're looking more at the asset, and obviously then just the profitability for being able to afford the mortgage. So a lot less paperwork, a lot less due diligence, and hopefully that will be the attraction that gets us some more footfall in the door at the back end of this year.
Yeah, I mean, absolutely. It's funny to see that there's the consistency on the buy-to-let market compared to sort of the commercial market, but it's definitely exciting to diversify, bring new products to market, products that sort of our brokers and introducers are crying out for, as you say, allows us to be a lot more flexible than some of our sort of bank competitors. But yeah, I think it's going to be a very exciting end to the year, if I'm honest.
Yes, I do. And yourself on bridging, what are your plans for the latter part of the year?
I think we're going to see a bit more, well, we're already in a very resilient market, as we've spoken about. And I do think, if anything, I think it was going to ramp up towards the end of the year. It always does in the run up to Christmas. Already saying the C word so early on. But I do think that, especially I think on the commercial, on the unregulated side, we will see more traction. I think, as you said, as the Renters' Rights Act gets a bit more embedded in and landlords know what they have to do and what they can and can't do, I think we'll see that market slowly start picking up once people know the parameters of it. Where, like you said, in October, I think the second sort of tranche of those rules are coming out. So I do think we'll see a bit of a, I'm hoping so, a bit of a boost on the run up to Christmas. I think the regulated side will stay consistent as it always does. Especially, I think, on more the transaction side, on the purchase side, people want to get in their new homes before Christmas. So I think as we get close to sort of Q4, we'll see that sort of build up. But I definitely think we are in a very resilient market, as we've said. And it's just about us as a lender being flexible, being quick on our feet, adapting to sort of the needs of our introducers, the changing market, and then just serving our introducers the best way we can.
Yeah, wholeheartedly agree. And as always, by Christmas, we'll be flat out and ready for the break.
Absolutely, as we always are.
Thank you very much for joining me today.
My pleasure as always, Marylen. Thank you.